Hi, good evening, ladies and gentlemen. This is Manoj Atri, your host for tonight. I'm a real estate agent with Remax Hallmark, and I have our mortgage expert also on hold wait tonight, and we will welcome him back. So let's go and say a hi to him, and then we will take on with the agenda of the day and the next plan of action. Faisal sir, hello.
Hello, how are you?
Very well. Happy belated birthday.
Thank
And
you.
we took off last week to,
hmm
I think so, to make it official. And so that you had some enjoyment there
Yeah,
and take it off. So how did it go?
it was good.
Okay.
It was not what normally would happen, but I liked it.
Wonderful.
That's
Very,
yeah.
very good. So, yes, as to our audience, that we cover this particular on every Monday, 7 to 8 p.m., working Mondays. And we might have to take next week off for, I'm running a wee bit very busy. And then from the following one, we will be on a regular format. So, just to give you a heads up there. So, let me start with the agenda of the day, and then we will pick up an important topic, and that is highly relevant to your field, and that let's venture into that particular one. So let me take over to the portion of our agenda of the day. Wonderful. Again, thank you, ladies and gentlemen, and thank you for joining. And I am like. I usually start with my real estate monologue, and that is when I walk you through a certain article of the day. And today's article we are covering is pay off your mortgage years earlier. We will be going back and forth with our mortgage expert on that. He does wonders with our clients, and he'll be able to guide us with very quite an insight that how you can avail and pay your mortgages years faster. So next is we are picking up on a very important topics, and that is problems with rent to own homes. Thereby I'll be picking up 5 most common problems with the rent on to own home scenarios, and that is the main agenda of the day today. And in between, we will be going back and forth with our mortgage expert, and we will be seeing his expertise on each and every point as and we go along. So let's head over to our article of the day, and let's start with this particular one. And this article of the day is by Money Talk News by Marilyn Lewis. It's called 7 Painless Ways to Pay Off Your Mortgage Years Earlier. Here's how to free yourself from our biggest debt faster than you would think possible. Okay, so now let me take you over to the first one, and let me first take some input from the expert and what he has to say about this particular one. Faisal sir, we had covered a similar format way back, so we are getting back into a very good article again, and
hmm
7 pointers to pay off your mortgage earlier, and we'll be going back and forth with one after the other. So any reaction to that?
You know what? It's an interesting article, and it is numbers don't lie. It's all a numbers game. And as one thing I have to say about article is every point that is discussed is a fact, and you just have to be consistent for you to get there. It's a long ride, let's say, and if you're consistent, you get there. And I've seen clients get mortgage free much faster than I could have imagined. So mortgages that I did 10 years ago, 12 years ago, Some of them followed certain advice. Right now, they're sitting at 1/3 of their mortgage,
Absolutely.
or even less. So
Yes, this is like it's a step in our buying process that this is the biggest amount that you are facing every day. You
absolutely.
need to be aware of some things that you can do that can make your life easy. So that is where this article comes in handy, and let's go one by one and see if we can make it further easier for them. Okay, so the first, this is the most important one, and I'm going to take an example here. So let me head back to the article here, and the first one that they are saying is make mortgage payments every 2 weeks. And this is like, let's explain you why are they saying this and why it is very, very important. And I will then explain it to you and then we'll take our expert advice there. In a year, we have 12 months or 52 weeks. So if you are paying monthly, you are making 12 payments in a month. If you go by monthly, instead of 12, you will be now paying 24 payments. That will be every 15th day. Now, when they say make mortgage payments every 2 weeks, what are they trying to say here is the 52 weeks are now divided with 2 weeks, and instead of 24 payments, make 26 payments in a year. And now let's see what exactly these 2 extra payments does. And that is what is the gist in this particular one, that not pay 24 but pay 26 installments here. So now let's take an example here and see exactly. This is an amortization table by khanawake.com. So you can do some calculation. There are many amortization tables on the internet. You can pick up anything, and this is what we want you to do some calculation and see how it will affect you and how it will help you out. The principal is, let's say, suppose $500,000, and the amortization is 300 months. That is 25-year amortization here. And I just took this information from our expert that the interest rate for 5-year fixed is, let's say, 3.39%, and you are on a monthly payment format. Let's calculate the payments that you are going to make. Now, this is what has to be understood. So your payments are close to $2,467, and the total interest that you give is $240,000, which is a huge number. And this is for 25 years. Now, this is the only change that you are doing. Instead of paying monthly, you are doing accelerated biweekly. So now, instead of these 24 payments, you are doing 26 payments in a year. And now let's see what happens. Okay, so from 242, it has come down to $209,000, almost a saving of more than $33,000, along with that now you can pay off your mortgage in 22.12 years. So you have shaved off close to 3 years here. Let's take the mortgage expert numbers on this one. He'll be able to guide us much better and see what he has to say here. Go ahead, sir. Well, did I miss something here?
No, you did not.
Okay.
It is true. Accelerated, biweekly, there's 26 periods. Accelerated, even better. You're shaving off about 3 years. Now, that one thing to keep in mind is the 339 is a 5-year rate, but it is using that for the entire amortization. amortization period as a projection, because we don't know what the rate will be in 5-year term.
Yes, you are right there. The only difference we are trying to explain them here is instead of making 24 payments in a bi-monthly, you're making 26 payments. You are shaving off some funds there.
Absolutely. No, I'm just pointing out certain assumptions that are there in the calculator.
Makes sense.
But
Makes sense. Absolutely.
It is a phenomenal way. If you can keep the cycle on biweekly, it's great. One thing I also tell our clients is, yes, there are 3 biweekly period in 2 months, in 2 months of a year, but you also want some break from paying a mortgage. So you really have to assess your lifestyle and see what works well. What is your priority? Is your priority paying off mortgage, or is tenant paying your mortgage? And if that is the case, then that's when you look at different payment schedule. But someone whose priority is to pay off mortgage faster, go biweekly.
Accelerated biweekly, yeah. So the article picks up on that particular one. Okay, let's see on the next one that we can go into. And so next one that they are trying to tell us is, pour every bit of extra cash into your mortgage. And they have given a small thing here that if it is 4% and let's get into this again. Pour every bit of extra cash into your mortgage. Yes. So let's head over to our expert there, what he has to say about this particular one. So they are saying, now let me ask you here, every time, like most of the banks have a 10-10 rule, like you can pay some 10% extra, and also in an year you can pay 10% extra. What's exactly is the scenario in the market there?
So every bank has its own policy, but the minimum I've seen is 10-10.
Okay.
Then there are I've also seen 20-20. Now, when I discuss this 10-10 and 20-20, of course you and I understand, so I'll break it down for our clients here. 10-10 means you can increase your payment by 10%, principal and interest, of course, only. And you can pay 10% of your original borrowed amount towards your principal without having to go as a lump sum payment, which does not go towards interest. And it can be either a calendar year, depending on the lender, or it can be the mortgage anniversary to anniversary. So it's different for every lender, but yes, minimum I've seen is 10-10, maximum I've seen is 20-20. And yeah, you're allowed to pay extra on top of what you're paying as a regular payment.
So basically, and at this moment, I just let's point it out. When they say 10-10, that means in case if you're wanting to pay more than 10%, then they won't allow you to do that.
Yes.
Yes. So that means like every month you can pay 10% extra of the mortgage amount, and within the year, once in a year, they can pay 10% of that borrowed amount that they took.
Original borrowed amount. So even if your current balance of the mortgage is 300 when your original was 500, you're still allowed to put 50,000.
Wonderful. Oh, that is also interesting news there. So basically they are also helping you out in order to pay it off faster.
Yes.
Okay.
Yes. Okay.
And is it like all institutions, or you have seen some institutions just don't allow you to do that?
I've not seen an institution that does not allow that. I've seen institutions that have said only on the anniversary date, or once a calendar date. Like there are some restrictions, but no, I've never seen an institution say no prepayment period. That's
okay.
Not how
and the reason we are trying to pick up on this particular one is, see, if you have some extra cash and you're just lying it in the bank, it'll be in your interest to pay off something extra, because that will get striked right into your principal and your interest will go down. That's the reason we are trying to pick it up. Instead, so if you have extra cash, then it is better to put some extra per month and per year, instead of just keeping in the bank, because in the bank interest rate will be hardly coming in cents.
Absolutely.
nothing nothing much. 2 cents extra extra this month you made.
However, however, while we're on this topic, I will say that once you put that towards your mortgage, if let's say there is an emergency next month and you want that money back, it is not reversible.
Oh, okay. So once you have made that, I mean, it stays there.
It stays there.
Okay.
So just keep that in mind when you're paying your mortgage. Like, you want to make sure that you have some cushion. You don't put every penny. Like,
Okay.
the way the article talks about it, it's to catch attention, but you need to make sure, because a mortgage is a one-way loan, is how I say it, where you can pay, but you can't borrow back unless you qualify again.
Okay. Now let me ask you. Let's just suppose someone is trying to pay $200 extra per month, and he pays for 3-4 months. Can he go and stop after that?
So some banks allow. Some institutions will say, one time you made the change, now you can make the change next year.
Oh, so you will have to wait for a certain period of time. So there may be some restrictions there.
There may be some restrictions, but those restrictions are minor.
Okay. So it's just we are trying to give the whole perspective here. So so that may be there. Okay, let's head over to the third part here. Okay, round up your payments. Okay, now this is also interesting. Like, okay, let's say suppose it is 1,013, pay 1,020 or even 1,100. Okay, let's see what does that entails. They are saying round up your just don't keep it in between, round it up. So how does that help? I mean, that's a very small amount. I mean, like, you're talking maybe between $5 and $10 here.
It is true. However, what happens is that $5 or $10, once let's just say your mortgage is $495 weekly. Okay, it's a small number that came to my mind. Or let's just say $1,495 monthly.
Okay.
Now you round that up and turn it into $1,500.
Okay.
Okay. That $5 is not going towards your interest.
It's going towards the principal.
It goes towards your principal. So the $1,495 is pre-calculated. Part of it is interest, part of it is principal. But when you add $5 to that payment and you round it up, the $5 is going straight to the principal. Now, because mortgages are and how they are structured with the institution, they're by law they're supposed to be by semi-annual compounding. Every 6 months, the interest is recalculated based on the balance at that time.
Okay.
Now, what that means is, if your balance was supposed to be $250,000, but because you kept paying $5, it's now $249,000 and
some odd number. Okay.
Now your interest is also less. It's less by cents, $1, $2, but that amount still helps.
Okay. Now, when we are on this particular one, so let's say suppose I have to pay my mortgage this month. So this month I pay $10 extra. Next month I pay $15 extra. The other month I pay $100 extra. Is that possible?
So not in that sense. You have to change the payment and it has to stay there.
Okay. So you have to stay with whatever you choose. I mean, like, you can round it up, you can increase it all the way to 10%, or you can keep it very close to that, but try to do something more than what exactly is the amount. That is the gist on this one.
Yes.
Okay. Makes sense.
One thing I also want to point out while we are here, institutions allow you to take both options. So when it says 10-10, 15-15, or 20-20, you're allowed to increase your payment by 10%, 15%, or 20%. And you're also allowed to put the
total amount, lump sum as a lump sum.
Lump sum amount.
Okay.
So it's not one or the other. It's both.
Okay, if I'm not wrong, I may have heard somewhere, okay, like if you miss the date when you're supposed to give that lump sum, then you're gone. I mean, like, do they give exactly a certain date or a certain period? What exactly happens?
Most institutions allow you a calendar year.
Okay,
Okay. Some institutions stick to the anniversary year.
okay,
And very few institutions have that policy of you have the day of anniversary to make the payment.
so
That one day.
okay, so let's say it's a calendar year. So in December you can pay lump sum. Now, is it any day of December or just on a specific day, or do they give a period kind of a thing, like the entire month of December you can do it?
It's not the entire month. It's either the calendar year, or it's a specific date, one of the two.
So it will be like and you will have to call them up, or how do you go about it?
So there's multiple ways to do it. Most times online access is allowed, so to your mortgage, and you can process a payment. You can plug in a payment, and it just takes out of your same bank account. You just have to have the funds there.
Okay.
That's one way. If you're not computer savvy, you can always call. Every mortgage company has a mortgage servicing center that will pick up your call and process a payment on the spot, or they will put the payment through and it will go through your bank account in a day or two. So there is always a system for that to be accommodated.
Awesome. Makes sense. Okay, let's head back to the article and see what is the next one that they are saying. Make one extra payment a year. That is what we were harping on, and that is where it has come. Try to make something extra. And whenever you're trying to do something extra, whatever, see, this will help you a lot. And you will start suddenly seeing that you are able to get this mortgage wrapped up much faster without overpaying so much of interest over the number of years that it's there. And you can get away faster. Next one is refinance into a shorter loan. But obvious, you should be able to pay that amount. Let's see, and we'll take an example here on that particular one. At this moment, we were on this particular example that it was $500,000 and amortization is 300. That is 25 years. Rate still remains the same. You still remain on accelerated biweekly, and your periodic payments are like every 14 days you have to pay $1,233. Now let's say how this whole thing goes. So this is 209 and this is 1233. Let me write it down so that we can get to see how these things change a lot and what exactly are we doing here. So instead of taking a 25-year amortization, let's take a 20-year amortization. So let's change this one to 240 months. But obvious, and we'll see what the difference will be, and let's see where we are and where we are going. Wow. Okay. So now you are left with 17 or 18 years here. So from 22, you have brought it down to 18 years. So further 4 years are gone off. And your total interest from 242 has come down to $165,000. So that is almost close to, I would say, close to $80,000 or $83,000 there. Let me see. That was 242 minus 165. That is 7, and that is 9, close to 87, which is quite a huge. And the period and the per month amount went over from another $200. So another $400, and you have been able to save close to $80,000 or $85,000. It's a huge difference, and you have to run some of these numbers if you have some extra payment. But obvious, we are talking about this whole exercise if you have extra payments. Let's head over to the mortgage expert and ask him what he has to say about this one.
Sir, those numbers are mind-boggling.
Yes.
Most times when clients are buying homes, paying the mortgage is not a priority. Buying the home is a priority. However, what happens is, your income goes up over the number of years, and you tend to have a little bit extra cash. And that's when you should consider what you just showed, because that will speed up your mortgage payments, and it will reduce the number of amortized years as fast as it can.
Okay, I just did some numbers. So we were able to take off $77,000 in a $500,000 property, and the per month amount went extra by $400. So let's say suppose, okay, now here, instead of you going 10% extra, you could have had taken even from 25-year amortization to a 20-year amortization. So the reason I'm trying to walk the audience and our clientele here is, try to do these calculations and see, like, these are like, you have to have your mindset on this kind of a format, and that is what we are trying to explain you here, that do some number crunching here, and $77,000 is not a small amount. And you have just saved yourself in interest only. And so that means in case if you had $400 or $500 extra, which you were just putting it aside, might as well, this is one option. You can put it in your mortgage. And instead of 25 years, go for 25 years, go for 20 years. And now in 5 or 7 years, when you come back, instead of going for 20, go for 15 and bring it down. You will be suddenly seeing that, and the best thing here is that the time flies in this country, you may be mortgage free. And I mean, you have saved. There is something lying there that you just need to have do an exercise. Do an exercise on these numbers and crunch them over. And that is the highlight that we were trying to pick it up for today. Go ahead, sir. Give me your insight there.
You know what? Those numbers are speak for themselves. If you can pay off, see, interest rate on the mortgage is important. However, strategy to pay that down is equally important, which is not usually looked at. So what we're doing on all of this is working different strategies to see how mortgage can be paid down faster and you can be mortgage free.
Absolutely. It is, I mean, see, we are always thinking about, like savings and where we can earn more. So now here, in case because see, sometimes you're not able to, if you have $200 or $500 extra per month, you do not have a clue what to do with it. You cannot go and purchase a bigger property. It won't work. But here, with those $200 or $400 or $500, you have been able to save $77,000 literally on these numbers. Now,
absolutely.
Yes, so work out your numbers and it may work. I mean, I would also like at this particular moment of time, okay, let me ask you, going back on this amortization table, let me head you back there. What do you suggest? I mean, should they take a fixed rate of 3.39%? And what is the, on this present day, what is the variable rate? And there is like a variable rate also that you can take.
Yes, 2.95, 2.9, in that neighborhood.
Okay, let's say suppose we are in the same situation.
Mm-hmm.
So would you advise a variable rate or a fixed rate? What's the variable best rate these days?
2.95. Let's use 2.95. It's a safer number.
Okay, 2.95%, and let's calculate the payment. Wow. You are down by $100,000. We started with 242. interest. We are now down to 1378. We're down to 17, 18 years here. Every 5 years, because you will have, whenever you have extra cash. So, I mean, this is also another option that you can look into. Variable interest rate, fixed interest rate, and these are like, run these numbers. And you will be able to walk them even further on these ones. And this is how you save money. So sitting here doing nothing, we've just managed to save $100,000.
Yeah.
And provided, but obviously the basic bottom line here is, but now see, what you exactly did was from 1233, now we are at 1378. So now let's calculate 1378, that's 5, that's 4. So another $300 more, 145, $300 more, and you were able to bring it down to 18 years, and you were able to bring it down to $100,000, which is a huge number. And this is your money. This is what you can do. There is, and we haven't done anything. We haven't changed the value of the property here. These things will help you, and that is where we are trying to walk you through on this one. So let's see what the mortgage expert has to say on that. Go ahead. Between variable rate and the fixed rate.
Variable and fixed. Historically, variable has been the winner, has been the better choice between the two. Fixed, one thing I like about fixed is it gives you the stability. You know the payment for 5 years, they will be same, so on and so forth. However, variable also offers you an option to lock it. So there are institutions that will allow you to lock it from variable.
I've heard the term like 5-year fixed variable. What is there something like that?
Yes. So 5-year fixed means it's a 5-year term and it's a fixed term, but it is a variable rate.
And would you suggest that?
That's what 2.95 is that product.
Oh, awesome.
Institutions use these words interchangeably. Sometimes they'll use the word closed. Sometimes they'll use the word fixed. Sometimes they'll they use these words interchangeably. It comes down to the rate, to be honest.
Sure. So basically what we are trying to grasp our audience here is look into all these when you're trying. You will be able to save a lot of good funds there. Let's see what exactly is furthermore in this particular article. And I think so we are touching on the refinance and pretend it's a shorter term. We just covered that one by doing it from 30 years. You can come down to 25. From 25, if you're comfortable, try for the 20. Okay, decide if refinancing is cost effective. Now, I want you to, this is the last one, and if you can guide us on this one, what does they actually mean by decide if refinancing is cost effective?
So, see, over time, we have credit cards.
Okay.
Sometimes you have car loans.
Mm-hmm.
Sometimes you have student loans. Sometimes you have other debts that you may not be able to consolidate with your mortgage the first 5 years. Because when you were buying home, either you didn't have that car loan or you didn't have that credit card or, whatever the case is. But at the end of your term, when the mortgage is up for renewal, you have a choice. You can either renew it as it is, which means that, okay, give me the paper, I'll sign it. I'm moving, I'm just doing a straight a renewal. But then there are times when I suggest, and this is usually when a client calls for a renewal or a good rate mortgage because the mortgage is up for renewal. And I ask them about any other debts that are outside, because why pay 18% on a credit card
makes sense
on a $10,000 balance?
Absolutely.
When that could be blended into the mortgage at
2.95. There you go. Okay. There you go. Okay. So, and now let's say suppose if they were expecting that they have all these particular ones. Instead of going for a 5-year fixed term, they may go down for 1 year or 2 year initially, and then refinance it faster. I mean, you can save even furthermore. So yes, look into all these things when you are trying, and that will save you a lot of funds there. So I hope this article has concluded now. And so this is the conclusion of this particular article. So they had given, and don't give lenders consent to pull your credit report until you're ready to actually apply for a loan, as that can be temporarily ding your credit score. So that's another tip by the article, and that concludes our article of the day. I hope we were able to give you some insight on saving down the line. And just keep these information handy, and we have the mortgage expert there. Whenever if you need further information on those ones, feel free to be in touch with us, and he'll be able to guide you quite an expertly on all these particular stuff. Now let's head over to our main topic of the day, and the topic was, let me get there, and the topic was problems with rent to own homes. So yes, this is like our regular format that we have been explaining you quite a while. Last webinar we had covered the rent to own scams. Today we are going to cover 5 most common problems with rent to own homes, a completely different line of action. So let's see if I can take you there and walk you through here. Okay, let's go here. So I'll walk you through the main 5 problems with rent to own homes, and let's take the first one. Okay, so the first one that I have picked up is the security issue. Faisal sir, I want you to have paying attention to some of this information. See if I can take you, guide you properly there. Security issues. Okay, let's give you a security issue here. What is the security that the property will close on completion? And that is a major problem with rent to own homes. Now, let me walk you through a brief scenario before I dwell further into this particular one. In a rent to own home situation, you are as a tenant and buyer. It is not that you have got a mortgage. In a mortgage, sometimes, let me answer you here also, it carries the same risk as a traditional mortgage with no chance of recovery. Now, let me explain you what does it means. In let's say, suppose for argument's sake, in a mortgage, you were able to miss out one payment or the other. You still will have a recourse. You can talk to your lender. He may be able to give you some leverage there. Whereas in a rent to own situation, you miss one payment and they are waiting to throw you out. They are waiting to keep your down payment. They're waiting to hold on all the extra amounts that you have paid. So absolutely, there is no security with rent to own situation. And that is when it becomes a major problem. So now let me head over to the expert and ask him, what is how he can handle, how do the lenders handle if you miss a payment? What happens when you miss a payment with a lender?
You mean the person who has property?
No, let's see. I'm trying to explain the difference. Had you had a mortgage, in this case, you don't have a mortgage.
Rent to own. Yeah.
In the rent to own, you don't have a mortgage because you are a tenant buyer there. So if you had a mortgage and somehow you're not able to pay that month, or you are late by any chance by a few days, what exactly, how do the lenders react to it?
So let me start you with this. Big institute, well, actually every mortgage lender has some sort of a system for financial assistance if in case the client cannot make the payment, as long as they inform the lender beforehand.
Okay.
Of course, it cannot happen month after month, but there are times in life when you've lost a job, or you just cannot make the payment, or something of that sort. So lenders have some sort of a system to either take that payment, add it to the end of the term, or give you just, okay, you need to pay the interest, we'll add the principal to the end of the term, or something of that sort. So there is some sort of a system. In rent to own,
the seller is waiting there.
Waiting, yeah.
You miss it, he takes it over. Now, let me ask you, on the basis of the lender, there are some, you must have done it, like this is only from the information that I keep on hearing around, that some of the lenders do give you an option, like you may be able to skip one payment. Is there something like that?
There are lenders that do have that system. It's not advertised because then that's not something the lender wants you to count on. However, those systems, pretty much every lender I know has some sort of a system. Now, we have to look at it from a different angle as well. It costs lender to kick someone out of the home and go through the whole process. It takes time. Lenders are very much supportive to work with clients' financial situation if there is one.
Makes sense.
And their lenders are not looking to profit from kicking clients out of their home. That's not what they're looking for. What they're looking for is the interest payment stream.
Okay.
That's their goal.
So basically, that is what I was trying to explain on this particular one, is that with a lender, you may have some option, whereas the risk or the security issue that you will be able to close on completion is high. That means you have to plan for the entire frame of the 4 or 5 years that you're trying to do a rent-to-own home, that you are able to cover, not miss a payment at all. Okay, let's head over to the next problem with rent-to-own homes. Next one is the financing issue. We have just touched a wee bit here, but again, what is the assurance that the financing will come through at closing? This is a major risk you are taking. Let's just suppose everything was okay on day one when you went into this particular one. There is no guarantee that the tenant or buyer can secure a mortgage at the time of closing. So this is a big problem. You have to be aware of this particular one and make sure you are able to get your financing done at the end of the term. Things can change. 2 years, 3 years down the line, things can change. And you have to make sure that you are covered. But from our point of view, we have to make you aware that this is a problem and that you are taking due diligence and due prudence in putting this together. That in 2 years' time, in 3 years' time, I should be able to get my financing done. And that is where the mortgage experts come in picture, that throughout that time frame, he keeps you on track. So let's head over there and seek his what exactly all with credit repair and credit scores. It's the same format. Faisal sir.
Yes, sir.
Assurance that they can get, that is where it comes in handy, that they abide by the instructions that you give them over a period of time, that you need to follow those.
Absolutely. Those instructions are there so we can make them the actual homeowner, because rent to own, it's all for future.
Yes.
So there are instructions, a list of instructions given. They just have to follow and sort of work through them because it's step towards home ownership. It's not, and we want them to actually succeed at the time of closing.
Absolutely. And the main thing that they have to remember in this particular format here is that they have to stay on course. Now, if by chance you think they you cannot stay on course, you will create a problem for you. Okay, let's head over to the next one. Next one is, and this is a very, very interesting one, and you have to be aware of exactly what it is. And the thing is, the property value issues. And I can tell you on the basis of the live examples that are going on there.
John, you need to lock it.
Okay, so not a problem, Faisal. Okay, so property value issues. Now, in 2016 and 2017 and 2018, and we're just trying to give you an example on that basis, the value of the properties were higher. Now, let's say suppose you indulged into a rent to own at that particular stage, they have now settled. And now you will not be able to procure a mortgage because the values have dropped. So what happens if the market value of the property is less than the option price? You purchase the property initially at 500, expecting that in 5 years time, you are now going to purchase it for 600. That's the rent to own. But now the value has fallen back to 550. The banks are not going to give you that much value there. The tenant buyer will have to come up with additional funds to secure a mortgage as closing. And that is an important problem, the value of the property. So you have to be a speculator here. What is going to happen in 3 years or 4 years or 5 years time? And that can become a problem. And let's head over to our expert there and see. Did I point it out right?
Exactly. If the property value drops, that's a huge one because now you've got a contract that says you need to pay more than what the market price is, and the lender will not be willing to lend on the contract. It will lend on the market price.
Absolutely.
So sometimes there's a gap. The gap can be 10, 20, 15,000. Sometimes it could be 50,000. We don't know. So it is, because it is rent to own and it is the future purchase, all those future speculations do come into play.
We are going through live examples on the in the market these days. Mm-hmm. People who purchased in 2016, 2017, when the market was crazy, 30 to 33% up higher, they're calling us. Now the values have dropped between $50,000 and $100,000, depending on the property. And if they are not able to carry, apart from the rent to own, a rent to own would make mm-hmm. it more difficult. Now, if they are not able to carry, they're not able to even walk out of the property, because they cannot close the property.
Exactly.
There is no buyer for that particular property there. So this is it's a market which is, and the main thing here is, and that is what they have to understand completely, that this is a major big problem. I'll keep on talking behind the slide so that I can get them an idea that this option price can become a serious problem.
Yeah, it's and I'll continue on the slide as well. It is a serious issue because it does not just affect you in terms of sorry, I should say it affects you in buying the property in more than one way.
I think so. If my graphic turned out to be correct on this one, did you see this graphic?
I missed it, but now that you point out, it looks amazing.
Yes. So that is what I was wanting. Like, okay, you're rising, and this one is broken. What do you do?
Yeah.
And you have bought on the basis that this is fixed.
Exactly.
You had speculated. And the main thing here is like we are all there. But the main thing here is before you indulge into it, this is a problem and you should be aware of this particular problem. Okay, let's head over to the next one. This is another one. This is where the specialist will, mortgage expert will be able to guide you. And I'm also going to point out some wonders that he has done. But let's walk him through. But he had help also there. What happens if the credit score does not get repaired by the time of closing? Now, you were going steady. You were trying to do each and everything as per the planning, but somehow it did not get repaired on the time of closing. Now, this is where the problem will become. The tenant buyer can lose all the initial deposit, extra down payment, and any renovation dollars. This is huge. It will change your life. So by any chance, if the credit repair is not fixed up. Now, I will take the expert on this one, and I will also walk you through what wonders he did this particular week. So that has also been done. First, highlight what exactly are we talking on this credit repair issue.
See, credit repair issue, and I'll focus on this on a very general term. It's a hand-in-hand process. Client has to want to fix the credit, and we have our own resource tools systems to do it. Now, in terms of in the context of rent to own, of course, your purchase is based on your down payment, which you paid over the time, your income, which you most likely have grown a little bit, but at least have kept at least to what it was originally, and then your credit, which is up to a point where the lender will give you a mortgage. If you don't follow the steps that are given, which most of our clients do, but there are some clients that don't. And the ones that don't have a harder time getting to where they need to be, or it takes longer time. Let's say we've had a client where we had to push for 1 more year for it to be able to accommodate because of the credit. So it as long as you follow the advice, credit can be fixed up, but it is a pillar, one of the main pillars to be able to get the mortgage.
Okay, I will take two pointers at this particular stages. One is, whenever you're trying to get into a rent to own situation, be very cognizant of the fact that you have to follow certain steps in order to fix your credit. You cannot leave it. You have to follow a path, because if your credit is not repaired, you are in a bigger mess than you started with. Now, so just be aware, and that the reason we are trying to point out these problems is you're aware of it before you indulge into it. And the good news that I want to give my audience here is that our mortgage expert here fixed someone within, I would say, 2 months or 2.5 months.
2 months.
2 months. From no credit, or what do you call it? What was the terminology there?
It was beacon reject with 4 collections.
Beacon reject to 618 in 2 months. A huge round of applause to you on that one and your team for getting that done, because I think so this is a remarkable even for yourself, I would say.
It is. Actually, I've had a better scenario of one of our client couple of years ago, but One thing about this client, about Beacon Reject with 4 collections up to 618, is she came from one of our YouTubes, I think, if I'm not wrong.
Oh, awesome. Okay, awesome.
So
Awesome.
it's slowly, sort of, she's seen the whole that what we talk about is actually possible.
Awesome. Awesome. So this is what we wanted to share today, that it is a possibility. But let's head back to the last one, or probably left, and we can then, but huge kudos to your team there, sir. It is like, yes, so the credit repair can be done, but it's a problem, and we are highlighting the problem, and you have to be aware of it and make sure you take adequate precaution there. Okay, now is the last one that I'm trying to cover here, and that would be my 5th one, which is, you may have done everything right there, but a landlord may have issues. And when we say landlord has issues, is he may run into some kind of a problem, and he may not be able to let you close the property. What happens if the seller landlord gets into a financial problem? He may have to go into a power of sale. Now, what do? You haven't done anything wrong. You were following all the steps. You were doing everything. He has to go and pay to the mortgage lender. He somehow didn't tell you. He somehow kept you out of the whole equation. And now it may become a non-binding agreement, and the only recourse may be through courts. And that can be a problem. So make sure you will have to have some kind of, whenever you are indulging into it, put some pointers or clauses accordingly, that these things have to be addressed, that somehow you will have to have some kind of a input here, so that you are not lost of all of these particular things. What do you have to say about this last particular one, and which brings us to the end of this particular equation?
I have 30 seconds, so I'll keep it short.
Oh, awesome. Awesome. You are on time. Perfect.
I think all the problems you pointed out are huge problems, every single one of them, including the last one. Things that are out of your control. So things that you can control, you can, but there are things that are out of your control. So be cautious.
Be cautious.
That's
yes.
the best.
That is the best one. Okay, perfect. We are on doing it perfectly on this particular time format. So this brings us to the end of the whole thing. And with that, I will just take 2 minutes to point out some of the websites that we have, and that you can go there and take more information. So this is the mortgage expert website, faisalgarcia.com. So that is his name.com. And the second one, which he has done amazing wonders here, is the credit repair, and that is creditrepairnow.ca, and you can seek all his information regarding the mortgage and the credit. And regarding my websites, you can head over here, which is called which would be the one that you may have come over and signed up here, which is manojatri.com/webinar. And these are some of the topics which we always cover. If you have a house to sell, you can call us, and if you need some information on the home value, we'll be more than happy to provide you that. I can get you some more inside information on rent to own homes, zero down or low down with cashback mortgages. Feel free to ask me on those ones. If you're seeking any power of sale listings, feel free to be in touch with me. And in case if you are in a problem, I have investors who can buy out for cash. Feel free to be in touch with me on that one. And this is the one that I always highlight. And please make sure you are subscribed to our YouTube channel, which is growing, and we are getting a lot of viewing time, and we need more subscribers there for to make it lively more. And here is all these articles, around 7 to 8 to 10 articles, which I do it on a daily basis, and which I curate and then email it to you. And so subscribe to this one. It is called MA in Real Estate, and all my emails, and below the description you will have a subscribe button for this one, and feel free or email it to me and I'll be more than happy to send you the link. And with that, we will conclude tonight on time. I hope so. And there you go, sir. I think so. We are on time, sir.
All I have to say is thank you to the audience to be here and soak up the knowledge. That's the best word I can say.
Appreciate that. Thank you for your time, and thank you. We will see you on the following Monday. So we are keeping off next week, and then I will meet you on the following Monday, and we will take it from there, and on a regular basis Monday onwards after that.
Also, please like, share, and comment.
Absolutely,
on these videos.
absolutely. That'll be great. That'll be awesome. If you are liking what you're seeing, please subscribe.
Thank you.
Thank you, Faisal. Thank you, audience, and good night to everyone.
Thank you,
Bye
audience.
for now.
Have a good night.
Bye.